Timeframes are a crucial part of understanding candlestick charts and developing a trade bias, such as whether you want to buy and hope the price is going to go up or sell, hope the price is going to go down. So let me explain timeframes. Every trader uses different timeframes for different goals. Intraday traders like using lower timeframes of 1 minute, 5 minutes, 15-minute charts for entering and exiting trades. Intraday traders is another way of saying day traders. So if you're a day trader, you're going to be using one of these timeframes, 1 minute, 5 minutes, 15 minutes. I've used every single one of these. My first couple years of trading, I solely used this. I really didn't look at any other time frames, and that's what screwed me. But you definitely need to not pay attention to the 1 minute time frame, because there's so many different opportunities that can come from the 1 minute time frame that look like great opportunities, but they're not. They're really not that great. 5 minute is good. It's a great time frame for trading indices and stuff like that. But the higher you go, the better. I'll just put it to you that way. And that brings me into swing traders. Swing traders like using higher time frames such as 1 hour, 4 hour, daily, weekly, and monthly charts for entering and exiting trades. So that means that swing traders are people that like to hold trades for a long duration of time, whether it's a couple of days or a couple of weeks, whatever the case may be. And that's why they like to use higher time frames, because there's more information within those time frames to help develop a trade bias. For instance, for every 1 hour candle on the 1 hour time frame indicates 60 1 minute candles. It also indicates 12 5 minute candles or 4 15 minute candles, right? They all fit into this 1 hour time frame. I'll go into what I mean by that in the next slide, but just know that there's more information packed into these higher time frame charts versus these lower time frame charts. I always enter off the 5 minute chart, but I also use the 15 minute, 30 minute, 1 hour, 4 hour daily and weekly charts to help form a trade bias. And I'll show you what I mean by that when I start to show my actual chart on TradingView and like show you my actual setup. To continue on, examples of how the same trading day looks on different time frames. So this candle right here, this represents the daily candle, right? This represents 1 day. Throughout this 1 day, price opened right here. It touched at one point this higher wick point of right here. It also touched this point right here on the lower wick, but it ultimately closed up here. Okay, this is a Doji candle. This is a Doji daily candle. This is the 1 hour chart. So these 24 candles are the same thing as this. It's just on a different time frame. This is a simplified version of this. That's the best way to put that. This daily candle is a simplified version of this 1 hour chart. Okay, all these candles, all these 24 candles fit into this. That's what that means. Just a different time frame. But you see how during this 1 hour chart time frame for the day, you see how many opportunities there were compared to just like there's just one candle. you can't just buy on one candle. You can, but you have no, like, you don't know what the hell is going to go on next. You got to wait for more information. This chart shows you all the opportunities that occurred on the 1 hour chart during this day, right? So if you wanted to buy above a bull candle and short underneath a bear candle, so you always read charts from left to right. It moves like this. It's like reading a book. You read from left to right. If you're looking at this and you're reading from left to right, you could have shorted underneath here if you really wanted to, but you don't know what happened to the left. You don't know what happened before this candle right here. So we're just going to say that we bought above a bull bar, right? And you bought here. You bought above this candle right here. Boom. So you bought right here. Risking off of this point right here. You could have made money going up. Boom. If you wanted to risk a measured move, which is where I'm going to get into exactly what those are in a different video, but if you wanted to risk a measured move, you could have sold up here. Boom. You would have made money, right? And if you wanted to sell underneath a bear candle, you could sell underneath here because price went up here. It tried to break this high. It did break this high, but it ultimately closed lower, then made a bull or a bear candle. You sell underneath that, and now you're making money on the way down. This just shows more opportunities that are present and available during this candle. And that is the 1 hour chart. 15-minute chart, it just gives you more opportunities to look at or more opportunities to capitalize on or lose money on. Depends on how you want to look at it. This is the same thing as this, and it's also the same thing as this, right? This daily candle is just a simplified version of this 15-minute chart. You see how on this 1 hour chart, if you're comparing this 15-minute chart to this 1 hour chart, it gives you more of an opportunity to like pinpoint like, all right, this was the best opportunity to buy during this candle. Right here, boom. And that's what going down to the lower time frames gives you. Going down to lower time frames allows you to pinpoint like an exact entry level or exact, like if you wanted to sell down here, if you wanted to get the exact bottom of this daily candle. It's going to be very hard to do that on an hourly chart. You got to go down to a lower time frame chart, like a 15-minute or a 5-minute chart. Let's just move to the 5-minute chart now. If you go off the 5-minute chart, this low right here was actually this point right here, right? And that was a bull candle. If you're going off of buying above a bull candle, you could have bought right here. You would have literally bought at the bottom, and you could have held it all the way up to the top. And if you held it for the rest of the day, because the day closed up here, you would have made money. You know what I mean? Like you would have made a profit, and that's that. That's why trading a lower time frame gives you more opportunities to capitalize on things, because you have more information to go off. Every single one of these charts is the same thing. It's just different versions of the same thing, right? Once again, this is a simplified version of this. This is a simplified version of this. This is a simplified version of this. It's just extrapolated in different time frames. So what you can also see, and why people choose to trade different time frames versus another time frame, is because of, like I said before, the opportunities that are presented during those time frames. If you're somebody that likes to trade a lot, then the 5-minute time frame is going to be your best bet. You know what I mean? Because you're going to have more opportunities. You had an opportunity to trade here. If you're wanting to buy, right? You had an opportunity to trade here, here, here. You could say here. You could say here, 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 here. Like there's just more opportunities to capitalize on, right? That's on a 5. So let's just say there was 10 opportunities on this one. On this one, there might only be 5 opportunities. On this one, there might only be 1 or 2 opportunities, right? And same with this. Like there's just more opportunities on lower time frames versus higher time frames. But on the higher time frames, because there's less opportunities, there's more of a chance that the trade that you do enter is going to be correct because of the buy. Like this is a trading range. You're not really going to understand which way price is going to go on this. But if you get to this right here, and this is actually a pattern that we're going to go over later in the course, if you buy above here, you can make money on that, right? And that is, and I just want to add this in there too. These are not the only types of time frames that there are. There are so many different time frames. You can use the 1 minute, 2 minute. You can create your own time frame. You can do a 7-minute time frame if you wanted to, or a 7-week time frame if you wanted to. Like there's so many different variations of what you can do for time frames. But I will say you need to niche down and understand one time frame versus another time frame. And it's good to cross-reference different time frames. This is a bullish doji candle. So for the next day, there's a slight edge that price is going to go higher because the price closed higher on this day than it was the previous day. So that is a little bit of an explanation on time frames, and I'll go into more on time frames when we get to the actual chart.
Hey, what's going on, y'all? I just want to give you guys like just a little update because I didn't mention this in the video. I am releasing my full day trading course, or just like candlestick reading course, on YouTube. Like the full thing. I did it a while back, and I just want to release it for everybody to have because I feel like it's really useful information right now that like everybody can benefit from if they want to understand markets, like basic knowledge of markets, and it will help you so much. I'm releasing the full course on YouTube. There's going to be a playlist in the description, so just check that out, and it's going to be everything releasing over the next month and a half or so. And like I said, it's going to be everything you need to understand the basic knowledge of the market and understanding candlesticks, because with this knowledge you will be able to read any market as long as you can see a candlestick chart for that market. It doesn't matter whether it's a stock chart, whether you're trying to trade like Amazon or Tesla or something like that. It doesn't matter whether it's a forex chart, whether you're trying to trade euro versus the dollar or British pound versus the dollar. It doesn't matter if you're trying to trade gold. It doesn't matter if you're trying to trade silver. It doesn't matter whether you're trying to trade Bitcoin, XRP, Ethereum, fucking corn, wheat, oil. It does not matter. As long as you have a candlestick chart that you can read, this information will, in my opinion, benefit you in a very great way. So if you want to learn more, just check out the free course. And like I said, everything is there. It's the full thing that I made. It's like over 18 hours long. You don't have to watch the whole 18 hours. It's whatever you want to do. But I'm putting it all out there for you. So if you want to watch it, then cool. It's going to be out there. Just check the playlist underneath in the description. And yeah, hope you guys enjoy, and hope you guys are having a great day. Back to the video.